Recently, I spoke to a few friends of mine who happen to be aspiring entrepreneurs who are planning to launch new businesses next year, and were inquiring about how to promote it on social media, but without doing so on video because they don't really like that sort of thing. I told them I had the perfect solution. Start with a podcast. Now, they were a little concerned about what all went into it, so I explained to them how Spotify for podcasters makes it simple, as you can record, edit, schedule, and grow your community all from your phone or from your computer or whatever else you want to use. Plus, if they wanted to monetize it, Spotify will even go out and find them advertisers. And the craziest part is, they do all this for free. So if you're like my friends, stop wasting time, start making money today by heading over to Spotify.com/podcasters or download the Spotify for Podcasters app today. Hey guys, Akil here. Welcome back to the Trading Coach Podcast. I got a very exciting topic for you today. It's going to be about weekend trading. I'm sitting here on a Friday, admittedly watching a dollar Canada position as it kind of hovers right below targets. It's about midday, so hoping this can hit before the weekend. And I'm catching up on some of the conversations that I've been having on social media with some of you guys, some of you traders. And by the way, if you don't follow me on social media already, make sure you do so at Akil Stokes RTM. Feel free if you have questions to reach out and ask. I love talking trading, if you can't tell. Love helping younger and aspiring traders out. And many of these conversations will create awesome episodes for the Trading Coach Podcast, like today, where we're going to talk about what to do over the weekend. And this is a subject that I've spoken about many times in the past, but haven't done so in a while, so I'm excited to revisit it. And I'll start off with the question from the trader. He said, "Hey, Akil, it's Friday. Question for you. Do swing traders hold over the weekend or take profits tonight? A lot can happen over the weekend, right?" And right away, when you hear that type of sentence or read that type of sentence, you already know what emotion is going through the trader, right? I've been doing this long enough that I feel like I've become a master in analyzing psychology and human behavior. So when you see stuff like, a lot can happen over the weekend, right? It's really a question that says, please tell me that I'm probably in a position. Please tell me that I can exit my position right now instead of holding it over the weekend because I want to take my money. And that's the biggest fear about the weekend. And I guess before we get into that, let's kind of go back and explain what swing trading is. Swing trading has kind of got, the term has kind of gotten morphed over time, but what it's commonly known as now, as I record this in the year 2023, is a style of trading that is, really less, the time duration is less than like an investor. So let's say an investor is buying and holding something for months and quarters and years and whatnot like that. A swing trader is typically someone that is involved in a trade for maybe days and weeks. Below that you have like an intraday trader, so maybe it's hours to days for the intraday trader, and then there's like the day trader who you're in and out during the day. So from a day trader, right, commonly day traders don't hold positions overnight at all. So you're typically in and out of positions during the day. Once your trading time ends, or once the actual trading day ends at rollover time, you exit everything, go flat, and kind of rejoin the next day, I guess, for a brand new battle. Always brings back to that trading video that I shot back in the day. If you guys get a chance to see it, go to my YouTube channel, just YouTube search Akil Stokes. Search the video, I think it's called 2618 and Kiss of Death Trading. And me and my good friend Jason Stapleton, we did a good kind of visual of what day trading looks like, and we kind of took you through the whole thing of light trader, dark trader at our trading desk, going into the computers, literally fighting. It's a cool little kung fu scene, and then the bell rings and us kind of being like, see you tomorrow, let's do it again. It's a good little visual, nice and funny, back when we used to have fun with this trading thing. But for swing trading, for someone that's going to be holding positions going days into weeks, there is the likelihood, and I can almost guarantee that you're going to at some point be faced with a trade that you are currently in. You are heading towards the weekend, and you've got to make a decision. Do you hold it over the weekend, or do you exit and get out of the trade? And typically what most traders do is they make the emotional decision, right? If they are down in the position, they hold, right? Because the hopium is strong, and they hope that kind of things will resume or things, I guess, will switch and change in their direction. Sorry, I haven't had the afternoon coffee yet. After the weekend, if a trader is up in a position, they typically get out because of the fear that, hey, I have money right now, I do not want to lose it. And that is not the decision that we can make. So my answer to this trader's question was, hey, it depends on the trader, but in most cases, if you're in a long-term position, you're going to have to hold it over the weekend. The other option would be to exit at the end of your trading day and then re-enter on the open. That will, there's pros and cons to that, but at least that will kind of get rid of the fear of like being up Saturday and Sunday, not knowing what's going to happen in the market on the open. But my question to you is, why? Why are you fearful? Gaps can hurt us just as much as they can help us. If you want to hear more of it, check out the Trading Coach podcast. Nice little plug there before I decided to record this podcast. But the truth is, many of us fear gaps. And that's the biggest reason that people don't want to hold over the weekend, because the weekend sometimes have gaps, right? You may not notice, but the markets are actually open during the weekend. The markets are always open. They're free flowing 24/7. What's closed are the brokers, at least the retail brokers. So when we see gaps over the weekend, it's just a change in price, right? That happened over the weekend while we weren't there. Imagine like an invisible candle that isn't printed. Now, 9 times out of 10, there will be no gaps in the market, or the gaps will be very insignificant. And speaking of gaps, you see it every day in the stock market. It's kind of the same thing, but in Forex, we're not as used to it because it's a 24-hour market, so we're just used to always having candles. But if you're someone that's been in the stock market, this is second nature to you. But 9 times out of 10, the gaps aren't going to be significant at all. It could be a 1 pip gap, a 2 pip gap, something very, very small. Every once in a while, you will see a big gap in the market, and that's typically caused by some type of event. So it could be a fundamental event, like an election. Maybe the election results came back over the weekend or something like that. Or maybe it's a natural disaster where an earthquake happened, or a volcano, or a tsunami. Something happened over the weekend, and the reaction that we would normally see in the market, we didn't get a chance to see it as retail traders in the market because the market was closed. Those are the times where you typically see the biggest gaps. Like, Brexit was another one, for example. But most times nothing is going to happen. So we want to get rid of that fear right there that the market will always gap. Another thing is that the market will always gap against us, right? We always seem to pick the negative thing, and that's in human nature, where pain is a much greater influence than pleasure. For example, whenever I talk to you guys about my motivation and how after all these years, why I spend so much time in the charts and why I'm always learning and working so hard, is because I am afraid to death to fail, right? Now, one may say, well, Akil, shouldn't you be working so hard because you want to become the best trader ever and super trader and master this thing? Yes, I do. That is true. But my bigger fear, my greatest motivation is failing and not being good anymore and not knowing what to do with my life and how I'm going to, kind of provide for my family. So I understand that we always put fear first, but let's be logical and realistic for a little bit. Based on our position, if we were to have a big gap, right, and again, big gap is rare, yes, it could go against us. And I've had trades where I've it's gapped down and it's gone against me. What happens is you just get stopped out at market, wherever that opening price is. But I've also had gaps that have gone in my favor. So I've had gaps where I've gotten into the market and it's opened up and it's gapped past my target profit, and boom, I made more money off the trade than I would have. So it could go both ways, and that's something that we need to keep in the back of our mind. And the response from our trader was, hey, Akil, if that was real money, he sent me a screenshot of an account, whatever like that, and I'll kind of skip past this. But basically is, he goes into, if this was real money, I would probably take it out tonight because I want to make blah, 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 blah. We'll leave that personal. I don't want to wait till Monday morning because of fear of changing direction, and news and weekend are mainly my reasons. So again, we're trying to find the stem of the problem, which we're hearing over and over again. Fear, 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 fear. And I said, hey, we can't trade based off fear. We should only trade based off of our rules. And I put something out on Twitter too, which made me sound even smarter. I said, we shouldn't trade off fear. The only fear we should trade off of is the fear of breaking our rules, right? I tried to sound smart and whatnot, but it's true. That should only be the fear. And that's the whole process over outcome thing where, we need to value a good trade as one where we do everything correctly, a bad trade as one where we break our rules. And the biggest motivator, if we're going to take fear into the equation, shouldn't be fear of losing a trade, shouldn't be fear of losing money. It should be fear of breaking our rules, because ultimately we know this: if we've done everything correctly, if we follow our rules correctly, right? This is from the voting versus weighing long-term podcast that I did, right? If we followed our rules correctly, we will make money. If we consistently break our rules, we will lose money. So the act of breaking our rules and fear causing us to break our rules should be the biggest fear, because we know that's what's going to make us lose money in the long term. And the trader responded once again. He says, surely ignoring fear entirely may lead to a lack of risk management. And I said, no. In fact, it's the exact opposite. Risk management is something that is built into our plan, right? You hear us talk about rules-based trading and trading plan. I think a lot of people just think, hey, trading plan is like rules for entries and exits and stops and all that fun stuff. Your trading plan, right, is your business plan. In a way, it is your Bible as a trader. I won't get into the full details of everything that encompasses it, but it's everything from your trading philosophy, trading psychology, to your actual trading strategy, to your risk management strategy, to your money management strategy, to how much you deposit, how much you withdraw, to how you develop and grow your business. Everything is involved in that, including risk management. So when we talk about rules-based trading, we're talking about risk management as being part of those rules, right? And part of a complete good trade is taking proper risk management, right? If you analyze the chart correctly, if you enter the trade correctly, if you put your stops where they're supposed to be at, if you put your targets where they're supposed to be at, but if you manage your risk wrong by pulling out of a trade early, guess what? Bad trade. We can't mark it down as a good trade, because although you did 4 out of the 5 things correct, you didn't do that 5th thing. So you didn't have a 100% good trade. And the next one was say, and he's still trying to make his case, which I'm not going to budge on because I've done this before, but this is an interesting one, right? He says, when you first got started and you had a little money, certainly that has to be a factor. And basically, to kind of sum it up, he said, well, here's the thing. Right now, I'm planning on starting with a small account size. Shouldn't I take different approaches, different rules, different tactics because I'm starting with a small account size versus if I had a big account size? And the idea is this, like, if I had a big account size, then yeah, sure, I can afford to leave money in there over the weekend, because if I lose it, not a big deal, right? But when I'm a newer trader with a smaller account size, because this account, this money is so precious, and I guess it's so limited, shouldn't I be willing to take it out and kind of just take what I can get because I'm in that process of kind of building it? And once again, the answer is no. And this is another big problem that we see with traders is we think about, or traders tend to think about money differently when they have less. Here's the interesting thing, right? You would think that when we have more money, we would value it less. And when we have less money, we would value it more. But it tends to be the opposite. And it's the opposite with thinking the wrong amount of way, the wrong way, right? So with the trader saying, hey, I should take my money out before the weekend because I made some money in this trade and I don't want to lose it. In their mind, they think they are valuing their money more because they're conserving it by taking it out of risk hands. Yet, when I have a lot of money, I should leave it open over the weekend. In their mind, they're thinking, hey, I'm taking on more risk by doing this. But it's actually the opposite, right? By doing these acts where I'm, taking profits early, or maybe I'm moving stops back or something like that, or even stopping myself out early, we think we're protecting our capital, but we actually aren't. We're hurting our opportunity to allow our money to work for us. And the truth is, right, we need to think less about the money and more about the percentages, right? So the same actions that you take with a $100 account, you should take those exact same actions with a $100,000 account. And truth be told, it's the actions that you take with a $100 account that will allow you to grow that into a $100,000 account, right? So I told him this: the way that you're thinking, the actions that you're thinking about taking, it's not easy. Because he was saying, isn't it hard? Can you go back to when you had, yeah, I've been there. I've been that trader with the small account. I've been that trader that made so many psychological mistakes and all types of mistakes. And that's why I'm here to tell you today that you can't do it. It feels good at the time, but trust me, it's the wrong decision. And it is the number one reason that traders fail, because they make these mistakes. They give in to these emotions. They convince themselves that what they're doing is helpful when it's really hurtful. And it's only the small percentage of traders that can kind of overcome that mental and psychological hurdle. It's only that small amount that go on to be consistently profitable traders. So the question you have to ask yourself is this: what side of the coin do you want to be on? Do you want to be that trader that feels like they're doing the right thing, but you're really just catering towards what you want to do, which is the wrong action? Or are you going to be the type of trader that trusts the process, follows the process, lives the process, embraces the process, and allows that process to take them from that $100 account to that 100K account? It's up to you. Hope you enjoyed the podcast. I would love your thoughts. If you're listening on Spotify, there's a little Q&A section below where you can write in your comments. And I love sharing it because people get to read that on Spotify. If you're watching on YouTube, you can do the same in the comment section below. Great conversation. Probably could have took it a million other ways, but I want to keep this podcast short and sweet. Before I go, just thank you as always for joining me. Thank you for all of you guys that had me in the top of their Spotify Wrapped. It's amazing, as it showed me how many people had me as the number one podcast that they listened to. A little weird you're spending that many hours with me, but I'm not complaining. I appreciate it, and let's do it again, and let's do it bigger, and let's do it better in 2024.